the big sectors, trying to have a sense of really what is the state of the different things that are out there in terms of the sectors, and make sure everything's coming through correctly. What is happening with this thing? Very briefly, let me very quickly change something with this view. Are you folks seeing a message across the screen? I'm trying to figure out how to make that go away. I don't know what happened. Maybe if I there we go. I apologize. All right, let's quickly show these disclosures of ETFs, these standardized returns. I apologize for that, folks. You know, you can use software for a long time, and then you click on it a different way, and then suddenly it does something you don't expect. By the way, I am going to be in Miami the week before Thanksgiving at the Crossroads Summit, which TradeStation Group is sponsoring. Um, CrossroadsSummit.com is a website. There's going to be some really interesting speakers talking about changing trends in the world of business and economics. I'll even be interviewing some of them. So hopefully you can make it November 21st and 22nd, CrossroadsSummit.com. Okay. So we start off as always, kind of looking at the big sector things here, and we just had Jerome Powell speak. And I'm actually going to start really quickly by taking a really short-term look at the 10-year Treasury yield. Let's just even look at like a 5-minute chart, just really fast. Looking here at TradingView, nothing all that interesting. He basically reiterated more or less what he's been saying. I think he don't think he said anything all that different or unusual versus what we've seen him say at other times recently. So um, let's go now and look at the S&P, kind of go down our list. So I think what's interesting here is if you look, this is just a very tight little bit of price action here. We got the breakout on the weekly chart of the S&P 500. All right, now this is a key thing here. I've been kind of watching some of these levels, and normally we look at weekly levels, but given the fact that the Fed was such an important thing, let's look at the daily chart of the S&P here. Now, on the S&P, sometimes the weekly levels matter less than the indexes. But, this was the breakout in the Fed, and it was this level right around the high that day on the Thursday after the Fed meeting was 57.33. Our low today is 57.24. So we're basically just going down and kind of holding around that. It's interesting if you look at that kind of weekly high on that Thursday, it kind of that was the weekly high after the Fed. Actually, I'm sorry, it was not even it was a daily high. Then we basically held it last week, is what I'm trying to say. So here's the basically the Fed spike up to that high, and then basically on Thursday and Friday of last week we went down and tried to make daily lows at it, which we did. Now we're kind of sitting at the same level. So the point is we're basically just sitting right around those highs from where the Fed was, and I think that's we're just sitting here at this point in time. MACD is rising. If you look at different things like the 9-day rate of change, that's rising. I mean, there's nothing on the daily chart that shows anything, especially bearish, that you can see. We look at the 10-day moving average. I found that to be a pretty useful thing on the S&P. And when the S&P does want to reverse lower, you'll see it kind of go down and sit at it and start dragging it lower. And very often, if we are going to go lower, it at least needs to spend a day or two doing something at the 10-day moving average before it just goes knifing down. So we're still above that here, and that may give us a signal that the short-term bullishness, remains in effect. So on the weekly chart, like I said, right now, I mean, it's only Monday, but inside week, so far that is not a bearish signal. We're above all the old highs, and last week's low was kind of like more or less 5,700. So I mean, at this point, there could be some kind of potential kind of chopping around those levels. But like I said, we're in a very tight sort of situation here, and this market has had a tendency to form tight patterns. At this point, is the end of the quarter, a lot of those things happening. But at the same time, we're entering a period where things look strong, and when you really, well, things historically are stronger. I want to say they look strong, but September is usually the weakest spot. Early October is weak, and then there tends to be, a historical pattern of things getting, more kind of positive. And a lot of things you look at, whether, cash on the sidelines, margin debt, sentiment, have various measures show sentiment getting very bearish in August and September, and people starting to get more bullish. There have been various reports about that. We're going to have an article on our blog tomorrow highlighting actually some of those turns, or at least mentioning some of those turns in sentiment from different people like S&P Global and some of these other, Citi had a report on it. So a lot of things now are at a spot where even with the market kind of near highs, some of those other conditions seem to actually be pivoting in a more positive direction. So we look at the Qs now. On the weekly chart, what's interesting to me here is the way we kind of got above this high from back here, this period in late July, this period in mid-August. We got above, and we're staying above this week, which is to me a pretty interesting sort of thing to kind of note. And from my perspective here, this high, this weekly closing high from early July of 496 might be something people are kind of watching to the upside. It's also interesting to me to see, you can see this more clearly also in the daily chart of the Qs, but basically we're basically holding this high around, it was 45.54. Actually put it on the sheet, we can see it. But trying to turn old resistance into new support is a weekly high there. And I think this is things potentially here. When you look at it, we have the Tesla deliveries are expected on Wednesday. We have incremental iPhone AI developments coming out after that. We have the robotaxi event on October 10th. Then we start getting toward earnings. And there's always that thing in the background. If you really look at the news, there has not really been a confirmation of problems with NVIDIA's Blackwell chips. If anything, we're getting a confirmation that things seem to be coming online. Maybe there were some production issues, but at the same time, there's no sign really that it's going to like have any significant problems. And you put all those things out in front, and it becomes kind of, when you consider the cash on the sidelines, the Fed cutting rates, all those sort of things, like the continuous downside pressure in energy and what that means for inflation as you look further out into the future, these things make it difficult to maintain, to a certain extent, a bearish sort of view. So I think here we have the Qs. This could turn into a bullish flag. So we need to realize that on the daily chart. But I think the key thing is holding that high, that around 45, while at the same time, this level up here might be something people kind of watch too. So this is, I think, the most important thing to look at, because obviously the Qs have such importance. The other thing I would say is that on TradingView today, I should actually mention this, we did an idea on Apple, which was, if you go to our ideas on TradingView, but basically I thought this was a pretty interesting pattern to look at on Apple as a 50% retracement. In fact, I will share the link to that right here, but it's been holding these 50% retracements, and you guys can check that out if you want to see. But obviously, that's pretty important for the Qs. So Dow Jones Industrial Average. Now this is one also a little inside week, and at this point, this could be something where I think there's no really clear sort of opportunity potentially. Maybe in something like this, it's just kind of a tight little range, and we have this this kind of recent weekly low here that people might kind of look to. This would be something that overall is it's just kind of confirming that there's nothing bearish happening right now. It kind of keeps that overall positive support under the market to see something like the Dow Jones hitting new highs. I have this kind of principle that the market goes through cycles of volatility versus, correlated volatility when everything crashes and rebounds together, and periods of stock picking environment. This is now a stock picking environment. The VIX is low, and something like the Dow at this point in time probably, might not be in a situation to give significant moves one way or another. The Russell, on the other hand, we're kind of watching, and from my view here, this is something where this could turn into a bullish flag. Now, but people might also want to really, there's been a lot of kind of frustration in this. So I think the thing is, if we get a breakout above this level, that might be really the signal people are looking for. On the daily chart, there is the beginnings of something here that people might view as a bullish flag. This pattern right here, we this breakout, and now we have this other kind of line right here that we're kind of breaking. And so I think right now this is something that people have been burned in this many times though, and we have the potential here. I think to get above, you need to see a push above the kind of 2260 area, maybe even a little higher. But this is something now where the exact level of the breakout isn't that clear, but it also, one thing that is relatively clear is that it hasn't happened yet. And there is the potential, I think, to be for some nervousness in something like this, because if the market does want to pull back some from here, people might see some significant space to the downside without really any confirmed breakout in this. And this is something that I think might remain sort of a wary, kind of a risk out there, while at the same time it is showing some signs of a kind of move through this. So one of the things, to me, the next chart is actually the most important, which I think will actually help us guide the Russell, and that is the 10-year. So the 10-year Treasury yield, we've been watching this, and we had said last week that people might see some space up here, up to kind of 390-ish. And that might actually be something now that I just everything about this now is it's kind of sitting and waiting, and it has some space to the upside on the yields. And I think we have to realize that does become something of a risk for things like the Russell. And we have payrolls on Friday, and that's kind of the big issue now for Treasury yields. All these things structurally look like there's a downward drag on them, but the question is, if people are going to jump in and buy bonds, are they going to do it now, or are they going to wait till something like Friday? So I think right now we're in a little bit of a spot where we might actually see, some upside risk in this, where you can look at the yield, you can look at this is the daily chart of the yields here, and we can see we have this kind of downtrend in place. But you know things like this can kind of poke and stab up for a little while longer. So, from my perspective, this is something that people might kind of see when they look at what's happening with energy. They look at the sort of notes from the Fed, and they're going to want to be buying treasuries, which would mean yields would move lower. But the thing is, do you do it now, or do you wait until those payroll numbers come out? And I think that's kind of more the issue with this, in terms of looking at yields and looking at something like the Russell. All right, now the XLB, we've been talking a lot about this, and its breakout potential, which we got last week. It was helped by China, but this is now a chart that we've been mentioning, the fact that this has a very significant breakout, and this is actually something here where people might see some interesting extension in this. This is now the weekly of the XLB materials ETF. And so this is now a pattern that is, closing at an all-time weekly high. This is a signal that, may suggest that now in other ETFs, this has often kind of been, when you have this kind of candle, it's on the weekly, it has often been followed by further highs. But now you look at this, it's kind of pulling back. So I think what's interesting is that we go over here to the daily chart, when we look at XLB, we can see that there are actually this level around kind of 95 is kind of standing out to me. Maybe 95.12 was that high from back on the 19th. That is a weekly high right here. So I think this sort of area right here on 95.12 might be the sort of next area where people actually kind of look to something like this on the nature of on the pullback. The other way to think about it on the daily chart is, this is the second day down. The third day down would basically, if it were to drop tomorrow, it would have some space, kind of down this candle. This is a bearish outside day, all around 95, the 10-day moving average coming up. So this is one where people might kind of, on a third day down, given what we're seeing of the Fed cutting rates, the Chinese is stimulating their economy, the weekly breakout, something like this on the third day down toward 95 might be something where people are actually active in something like this. So communications XLC, this is another one we were really talking, really kind of emphasizing the 87 3/4 level on this chart. And this is also one where that basically confirmed that breakout. And now at this point in time, it's also a tight little inside week. And this might also be something where at this point, periods of a few days of chopping, and then the potential for kind of continuation of new highs. I think it's important to realize that the XLC only now broke out to all-time highs above its high from 2021. So this is one where you look on the daily, maybe give us also some sense. This is basically only its first day down, nothing really happening with this. This might be something where people are kind of watching for some tests back kind of closer to 87, 89 and a half. I think the bigger point for something like this is that the big name, is Meta, which is showing here, this breakout to new all-time highs. So I think also if it's something like XLC, the opportunity may not be in XLC itself as much as it is something like Meta, which has, at this point in time, earnings coming up. And the other thing is you got to realize with this was back when they said they were going to spend a ton of money on AI to gap down. They kind of threw the bad news out there. And then it's pretty interesting that they basically were having good earnings when the market crashed back in August. And then it just kind of sat. So, from my perspective, Meta might be kind of the way people are focusing on, communications. The XLC itself has that kind of bullish signal on the daily and the weekly, but overall, in and of itself, in the very near term, people might not see a huge amount exactly in this one chart. Now, energy, XLE. This is one that we have been kind of wary of, consistently noticing the potential risk of multiple things. Today we got more news with Reuters had an interesting headline that oil analysts cut their price targets on crude oil for the fifth straight month, with all kinds of negativity about concerns about demand and OPEC and everything else like that. I think right now we have a range more or less between 90 and 85 and a half. This is something here where it's interesting actually if we look on the daily chart now of this, because we do have Fibonacci retracement of this entire move here. We're kind of stalling at about halfway down below this move and the 10-day moving average that we're underneath. So I think, from my view here, something like energy is in a spot where if the situation in the Middle East improves from here, it would be very difficult potentially to see much more upside in oil, especially when the Saudis came out and basically decided they were going to increase production and everything like that. So, people might kind of view crude being in a kind of ongoing, watch of a kind of deeper pullback. If you look here at, the daily chart, you can see the 50-day moving averages cross under the 200-day moving averages. That's called a death cross. Probably gonna get some attention. You'll probably see some articles on places like Market Watch saying death cross in the this bearish short pattern just appeared on ETF or something. That sort of stuff starts kind of getting people's attention. So I think you look at energy here, it has this tight little inside week, but these big sort of candles here without the follow through to the upside, kind of suggest that the energy bulls are kind of breathing their last gasps before something more significant might potentially happen. If you look at crude oil, we actually talked about this before, but on the futures, you look at I'm gonna look at a 2-week chart long term of crude. Let me get this CL1, this thing on trading view. But I think it's important if you look at this thing historically, if you look back basically to this level, like right here, back in 2014, it kind of had a weekly, an important weekly support, and then it broke. And I'm looking now right here at crude at this, and I just wonder, is this a similar sort of situation? Increasing production, everything like that. So I think we have to realize here that this might actually be something that gets pretty bearish for crude. And I think that's also something overall for the market for interest rates and everything else that could be kind of interesting here. So this to me is something I think that is kind of lingering in the background, and it's something that we have to bear in mind when we look at energy stocks overall. Now, financials, XLF. This is just kind of range bound here. We had mentioned, I'll go to the 1-week chart on this. We had kind of mentioned the, kind of potential issues. Just looking overall, VIX kind of pushing higher here. S&P bleeding down on the intraday. I'm not sure if Powell said anything all that different. Yields pushing higher. So, probably just the fact that the news is now known with anything Paul would have said. And, we have a little bit of space on the calendar and on our, overall in terms of time. Yeah, Powell said that the Fed is not on a preset course. So that's kind of like not, you know, utterly dovish. So the market's like, all right, well, no need to do anything in a rush. So that's basically interesting. Let's look at look at this. This is the Russell here. I still think we have to be careful of this space on this. All right, so getting to the XLF, very much a sort of period spot here between 43 and a half and kind of 45. In my view here, we have, things coming up like, what do you call it? Earnings and at this spot, we've had this with nice rally and breakout, and at this point, there's just some sideways thing. There's also some risk. I mean, it's a complicated thing, but with this floods in the south in North Carolina, these guys have. It's kind of funny, but the biggest financial now is Berkshire Hathaway. You got a lot of property and casualty names that have actually been really strong for the last several years, and they are now a bigger part of XLF. And so I think this is actually kind of a tricky sort of thing here to see it in this range. So, from my view, this is something where people might want to be, watching and waiting and seeing if you get a kind of smash down to 43 and a half or something close to it. But also realizing that, very often these things are weak when earnings begin, and then a week or two later they get strong. So the thing is that, earnings come out, they start hitting on these guys. Next week, actually, we have the first big earnings the week after that. So this is something where people might be looking for something under 44. XLI, industrials. This is something here where we also have this kind of breakout. This is probably the first or second day down in overall, something that's kind of extended here. So I think this is also something where people might actually, at this point, let's kind of move up our potential kind of level to be watching here. That low from last week of 132.76 now might be something more that people are looking for. I think this is more now. Uh-oh, what's this? Sorry. No. Anyway, now the next one is tech. Tech, very similar to the Qs. And at this point, I think we have to realize, potential kind of false breakout here. Um, Inside week, just very tight price action here, people. The next level really to watch on this could be last week's low. In my view here, there's something where people might just be, let's see, I'm going to move this down a little. Also, with the end of the quarter and everything else, there's no, real rush on anything like this. And I think right now we have something where this has, some risk of a bigger reversal. I mean, it's, when you look at the chart, you can say a lot of bearish things about the Qs and everything in technology. Some of the charts you can actually say there's bearishness in something like the Nasdaq. I still think that we have to remember where we are in the cycle, where we are at this point in the calendar and everything else. And it might be difficult to see, you know, significant kind of selling and downside. And the reason I just say that is that there is just a lot of evidence that there's a lot of cash on the sidelines. And I think as you look out, we have a situation with energy and everything else that, it's hard to kind of envision something that is overly negative 3 to 6 months out. I think when you look at where we are with interest rates and inflation. All right, so consumer staples here. The level I'm watching on this is around 82.08. This had a strong run, and now this might be something where it simply has to consolidate here for a while. This is an environment also where the interest rates and everything else do continue to favor this. I think we have to realize that a lot of this is not just a safety play. It's Walmart, which is driving this ETF higher. And this is now kind of a period of sideways consolidation. This is something where it's a very, overall, this is a breakout. It's not a very fast moving sector, but, this might be something where we get some sideways movement and then, a little bit of stabs down toward 82. And then people, that's where potentially the buyers might be stepping in. So I'm just quite on watching that level, see if we can get any test down toward there. Real estate XLRE. this is interesting. I'm trying to see here if we can kind of hold the weekly low here. So if you look at the low, is at 44.07. Now it's 44.05 this week. I want to see here if the real estate ETF can hold this kind of double bottom on the daily chart. And then on the weekly chart, we kind of have this level. This high was 44.20. Today we were trying to, we're pretty much right on top of it. So we have a weekly high here from early September. Let's see if we can turn this old high into new support. I mean, there is, when I look at this, this looks to me like something, there is some potential here of this one kind of holding. If you actually look at it, it has some kind of, this could turn into, if you look even like a shorter time frame, trying to really, it just has this squeezing downward price action, and sometimes this might turn into a falling wedge. Is the thing I'm trying to kind of see. But let's watch it here because at this point in time, also when we if we have a spot when yields start moving lower, this might actually be something that gets kind of active. And people might flock back to it. Let's not actually forget that real estate is, I mean, it's outperforming now this quarter. If we look on the kind of, if we look over here on our key ETFs, we look at like a 3-month basis. Real estate is the number 2 sector in the last 3 months after utilities. So this has some momentum, and it might be something people kind of look to. So at this point, real estate here, I mean, it's a traditional sort of um, play on lower interest rates. All right, so now utilities here, um, confirm breakout, and the price action is kind of narrowing, and this might be something I think people have to be careful of at the end of the quarter. Now, real estate may have that risk as well. End of the quarter, you get some potential for some rotation to other areas of the market, and something like utilities here. The thing about real estate is it's had the pullback. Something like utilities have not, and so I think right here, a lot of these factors are kind of interesting that there are fundamentally hitting in this, but it has broken out above these old highs. And just given the size of its run and the fact that a lot of news is now priced in, and we have the quarter ending, you put all those pieces together, people might, just be kind of waiting to see, do we get 78? Do we retest 78 or something in that ballpark before, people want to really step in any significant way? Um, Healthcare is, one that's kind of interesting to me here because also it's holding this weekly low. We had kind of said last week that, it had that potential. It had gone from being bullish to neutral to the potential for short-term bearishness when it kind of goes on that spectrum. And then it kind of, I've often noticed when they go from being bullish, this is bullish, it goes kind of neutral. Then you get these kind of jams down when it smashes down a little bit, nothing dramatic, and then you see if people can come in and defend those lows. So I'm kind of watching here to see if healthcare pull back to the 50-day moving average as well on the daily chart. The healthcare here to me, the XLV is holding some potential levels that people might kind of look at. So XLV and XLRE, those two are kind of holding levels here. Something like XLB has the pullback and maybe down, a third day down or something like that, a retest of that weekly high. We talked about an XLB. Those might be some opportunities people are looking for. Now, XLY itself here, this is also one where it's had the breakout, and we have Tesla deliveries on Wednesday, which is likely going to be a catalyst for the XLY. So I'm just kind of watching this here to see what comes up as well. This has had a really strong run. It's like XLY here might also, this is the first day down. Maybe we just need to have that second and third day down. Tuesday would be day 2. Wednesday would be day 3. Tesla deliveries on Wednesday. So you kind of put those things together and kind of see if maybe tomorrow we get a little bit more, space to the downside. And then maybe on something on Monday, on Wednesday, I should say, maybe that's actually a time when people might be looking at this more seriously. All right, so these are the main things overall I'm looking at. This is something I kind of try to do in a methodical, systematic way to identify sort of things. Let's take one last look at the 10-year, see what's happening with that. So, I mean, Paul is putting some upward pressure on it. And, this is something where I think we do have to realize that this is, structurally, um, there's nothing here that really is pointing higher in this, and I think it's just at this point in time, people might be kind of waiting and watching. I think we just have to remember that um, there's often catalysts that trigger moves in specific things. And for something like the 10-year, it could be one of the economic reports. We do have some other economic reports. We have the Institute for Supply Management report. I believe it's, I'm looking at my other screen on my calendar here. We have the ISM report tomorrow that has in the past had different kinds of impacts on sentiment as well. So there's these economic reports this week. We have ISM on Tuesday. We have ADP payrolls on Wednesday, which in my view is kind of lost its credibility for very much. And then we have non-farm payrolls and unemployment on Friday. So those are the main things. We will be doing market trends as usual on Thursday afternoon at 2 p.m. Hope to see you guys then. And in the meantime, have a great day, and I'll see you later this week.